In today's video, I'm going to break down some of the changes that are coming about that are going to help everyone, or a large majority of people, millions of Americans, getting a boost with their credit scores. If this goes through, um, I'm hoping that it'll go through. It'll help. And also, there's going to be a change in the scoring models. I haven't seen too many people do a deep dive in the exact changes that are going to be happening. I'm going to go into detail in this video so you will know exactly how the scoring models are going to be changed. They're basically going to be looking at some different databases to see if anyone, all of us, when we go to get a loan, that we're credit worthy. They're going to be, adding to the ways that they're going to, I guess the algorithm that they're going to utilize to make those decisions. Before I get started, I want to give some congratulations. We got a huge group of people who have completed their credit repair process, and a few of them are about to have their dream home. Yes, they're about to start building wealth for themselves and their family. You know, I always say that for most people, the first investment that they actually make is in their home. Because and it's more than just a financial investment, it's an investment in your security. It's yours. You can do anything that you want to it. You can put up a fence, do whatever. You paint the walls red like my wife did when we bought our first house. I was like, are you crazy? I think she did it because she didn't have to ask anyone if she wanted to do it. So it's more than just financial. It's yours. No landlord looking over your shoulder, coming in, knocking, I want to do an inspection, all of that stuff. Got a group of people about to go get their dream cars. I love seeing that. And they're going to get it the right way. They're going to have the lowest interest rates. Have fun with that. We got a group of people who got their court debt collection lawsuits dismissed. 8,000, that comes to mind, 8,000. One was for $1,100, which, they're starting to come after people even for those lower dollar amounts, which is crazy. Help some people avoid getting their money taken out of their bank account, and also help some people get their money back. They had gotten default judgments. We helped them with the motions and they were already being garnished of their money. Because they had a default judgment, motion was put in, all of the money that was taken from them was given back. You can't say that that's some good work. Recently did a interview with my man on his talk radio show, Earl Ingram. You can look on my channel. I did post that. I'm not sure if you could hear everything. I'm going to go back to check that, because it had came up that some of the music that they were playing, because they are a radio station, was copyrighted. So I'm going to have to check that out. Maybe I can cut the music out and then repost that video. So first, what we're going to do is we're going to talk about the changes in the credit reporting that can impact your financial future. We're going to break down so you can see how it will affect you if you're in this category. And then to start off, we're going to talk about the Consumer Financial Protection Bureau, which finalized the rule on removing medical debt from credit reports. This means that medical bills would no longer affect your credit score, potentially boosting scores by an average of 20 points for millions of Americans. Now, before I continue on that, we know that the Trump administration put a pause on the Consumer Financial Protection Bureau, and then it got opened back up. So I made a video last week that it looked like it was shut down, and then and they put that little unplug on there, so maybe they plugged it back in. And then secondly, the new credit scoring models are going to be rolling out, which changes the way that creditors will assess our credit worthiness. These models aim to provide a more accurate picture of all of our financial health when we go to get a loan. So now, again, however, there's been some recent developments that have cast uncertainty on these changes. The Trump administration has halted operations at the CFPB, leading to questions about the future of these initiatives. Now, it is opened back up. I don't know if they've allowed them to continue the work on that, but I'm going to let you know, what I'm seeing here from the research that I've done. If these changes are delayed or reversed, medical debt could continue to affect credit scores. And the anticipated benefits from the new score models might be postponed. The situation underscores the importance of staying informed about policy shifts that impact your financial well-being. We'll keep you updated on those. I'll keep you updated to let you know what's going to be happening on that. The news changes from day to day. So the first thing, let's talk about the adoption of the advanced credit scoring models. The Federal Housing Finance Agency, FHFA, has approved the use of two new credit scoring models, FICO 10T, and I've talked about FICO 10T years ago, and VantageScore 4.0. Now, some of the times when we've worked with people, they'll be like, well, why should I have my VantageScore and then the FICO score? All creditors are going to use the FICO score. And from from what I've seen with clients, their FICO score is usually higher than their Vantage score. But they're going to have some type of combination of these two models. So the models offer a comprehensive analysis of the borrower's credit behavior. The FICO score 10T incorporates trended data examining credit management over the time period to provide a dynamic view of credit habits. Now, in my video that I made probably more than 2 years ago, I had talked about the 10T, FICO score 10T. The major change that I saw was that the way that the model was written before, or the FICO that was before that, is that they would look at 24 months. So the risk factor that they was looking at was 24 months. And on your credit reports, you will see 24 months. Like you'll see right below the account, it'll have your payment history for 24 months. The 10T, what it was doing is it was adding to 36 months. So what we were used to seeing is like even if you messed up on a late payment or something like that, after that 24th month, it would be off your credit report, out of sight, out of mind, like it never did happen when they ran your credit reports. To look at your scores, look at your history, that wasn't going to matter. But now with the 10T, it will matter, even though the bureaus haven't updated to show 36 months, it will still go into the credit scoring model. The 10T model is going to use 36 months. So when you think that late payment or whatever you did with your payment history, this is where it mainly affects payment history on open and closed accounts. If it is gone, it's going to affect you on that. If it's going past 24 months, but it's like on the 27 month, 28 or whatever, it's going to affect you because that's going to actually go into the algorithm on how they're going to read if you're credit worthy. So you could have an excellent score. And this is one of my clients called me and he was like, my wife has 730, 740 scores. And I was like, we worked on her credit and they must be using the 10T model because the stuff that was worked on that we resolved, even though it was off the credit reports or that information with those late payments, it's been past the 24 months, they're using something in that model to deny her. And I said, wait for that letter because we're probably going to see that in there. We haven't received a letter yet, but my suspicion is that they're using a 10T model. With the VantageScore 4.0, it utilizes machine learning techniques and considers alternative data sources such as utility and rent payments, which would be a bonus. That would be something that could help people to assess the credit worthiness. So they'll have those two combined. Hopefully they might offset each other. These models are expected to increase scoring accuracy and expand credit access to individuals with limited credit history. So, removing the medical debt information for the credit reports, if the CFPB can get that finalized and they can go into action, that's going to, bring huge benefits to people. It's estimated that about removing about approximately $49 billion in medical debt on credit reports right now, benefiting anywhere between 15 to 20 million Americans. And it could increase those scores 20 to 50 points depending on what's going on with their credit reports right now. So now, incorporation of the alternative data. Financial institutions are increasingly considering alternative data such as rent payment reporting, utility bills, non-traditional financial information for credit worthiness. Why shouldn't they? People are paying on this stuff. They're paying on cell phones, they're paying on utilities, paying on rent. They should get credit for that. This approach aims to provide a more holistic view of the consumer's financial behavior, especially for those with limited credit histories. The adoption of these alternative data seeks to improve the accuracy of the credit assessments and expand credit access to underserved populations. However, regarding data privacy and potential biases in the algorithm assessments remain to be a topic of discussions. So we don't know if there's going to be certain things with redlining. You just never know. But the proposed changes are put in place to give a more accurate and equitable credit reporting system, putting that in place, and it'll help improve the assessment of credit worthiness, even for individuals who do not have a lot of the traditional trade lines on their credit reports. So I hope that this information has been valuable to you. Please like this video. Please subscribe, share. If you need help with your credit, please visit us at thecreditrepairshop.com. Watch the video What Makes Us Different so you can see my 8-point validation process, my 2-phase settlement process. If you need your credit reports and scores, go to the website your3scores.com to grab your TransUnion, Equifax, and Experian credit reports and all 3 scores. If you have debt collectors coming after you, grab my 3-pack of letters, statute of limitations, debt validation, cease and desist collection activities letter. And I give you those absolutely for free. Just click the link is below this video, and those letters can save you time, money, and frustration. I do ask for a donation on those, and I appreciate everyone who donates for me giving out those letters, because it can literally save you hundreds, if not thousands of dollars. Thank you for your time. This is Stephen A. Williams, President and founder of thecreditrepairshop.com.